We saw an absolutely enormous squeeze yesterday. Most of that was driven by a short squeeze. So our targets have been met. In today's show, we're going to talk about what happens next, right? This has been the exact levels that we've been looking at for a long time. It wasn't only crypto. Also, the stock market is starting to at least bounce ever so slightly, but crypto definitely defying the odds. And we said that's something to pay attention to, right? We said there is going to be double digits, potentially even triple-digit gains on a lot of the coins out there, and you can see, tweets coming across the board over here. We're so back, but I do want to remind you, right? I do want to remind you just of this image over here before we do get too excited. We're going to talk about have things changed for real or not, right? We outlined in the Discord already on the 16th, the long trade setup over here, trading it into the key levels. And this has been the target, the yearly open and the previous month's high, $93,000 to $95,000 Bitcoin price. That was one of the trades that we're looking at over here in the Discord, pretty much playing out to perfection. And for those who were late, we even gave it again, right? A little bit higher up from, if you missed the first one, we gave it a second time in the Discord at $87,000, price moving towards the upside. And there it is, right? Fulfilled the exact trade, the long trade perfectly. And this is what I keep saying to people is you almost can't afford to not be in a community, right? A community like a Discord, somewhere where you can actually keep your finger on the pulse, because the market is very volatile. It's ever changing. You can't wait 24 hours for a show. Sometimes if it happens over the course of the weekend, which is where a lot of the moves have happened, well, then you need to be updated immediately. And that's where all of this happens, right? In the Discord over here, we got the voice notes going. We're updating you every step of the way. Now, I know a lot of you in the comments have been asking, can there be a discount for Whale Room? You really want to get in? Can there be a discount? I literally just messaged the guy this morning. Right? A lot of people are missing out on the insane opportunities because it's information sensitive, right? I asked the guys that run Whale Room over there in terms of the payment plans, can they issue a promo code to get you guys a better deal? They came back, they gave the better deal. It's first come, first serve. I'm about to pop it up on the screen for those of you that want it. You can pause the video. You can click the link in the description below over here. Go through to Whale Room over there if you do want to jump in and get those trades. There's been a lot of them. I'll give you more in just a moment. These are the promo codes. First come, first serve. It's tiered, right? The quickest fingers first will get the biggest discounts, and there it is. If you type in 130, you'll get 30% off. That is for the first 10 users. If you type in 120, you'll get 20% off, and that's for the first 15 users. And then for the rest of you, 15% off, 115, right? 115% over there. That is your promo code. It's not case sensitive, right? So we saw a short squeeze yesterday, right? Look at that. There it is. There's the short squeeze. You can literally see on that massive candle towards the upside. Look at what happened over there in the aggregate funding rate. The market participants were trying to short the move the whole way up, and that cascaded price higher and higher. So some really big sizable moves over there. And we spoke about this. We said that every time you see the funding go negative, and we actually covered this not only in Whale Room, but on the shows, then look for a buying opportunity, right? The negative fundings have led into big spikes towards the upside. And that's exactly what took place. So if you look at the data over here, massive liquidations, and of course the majority came from shorts. 554 million, right? From the short side, only 70 million from the long side. Now, should you market buy right here, right now? I guess it depends on your time horizon, how quickly you want to take and exit the trade. Theoretically, you probably could, because I actually do believe you'll probably get another squeeze towards the upside. But should you wait if you're a longer term trader and get in on the next major high low? Yes, that's probably the better bet. If you're a more conservative trader, you've now broken structure. You've created the higher high. You're now looking for the high low. The downtrend has broken, right? So that at least is a good sign. There it is. One of the leading indicators that we utilized was the RSI on the daily time frame. We said as soon as it started to break above there, that was part of the reason why we were looking for the long trade in this key level, was the RSI as a leading indicator breaking out of that key zone over there. And that's exactly what we got. Now we can look at the weekly as well. We spoke about it and we outlined the previous times that this happened on the weekly using the RSI over there. Once the RSI broke out of this, that's your arrow over there. You still participated in a major move towards the upside, meaning you didn't really really miss much, right? RSI broke over here, the first weekly candle that broke it out. You participated in a lot of upside. And now this is the third time that that's happened. This weekly candle just closed. And that was part of the parcel of why we were looking for still some long trades. And we gave additional ones, even if you missed the first one over here. So all in all, that's looking good. We do have RSI support. We have volume that's starting to come back into the market. If we just go back to this particular chart over here, you can see on the break on that move that we took on the trade yesterday in whale room, you did get a volume spike over there. At first on the 12 hours looking a little bit sketchy, but then you started to see the volume slowly increase over there. And now I'm expecting that later on today, the daily exchange volume, when this refreshes in about 2 or 3 hours, you're probably going to see a bit of a turn over here. Now, this hasn't broken the structure. It's lower lows and lower highs has been the name of the game. Price has led, RSI led. First, RSI broke structure towards the upside. Price has now broken structure. Now we expect that probably new volume is going to be coming into the market. So it's a very, very interesting time in the market. And one of the reasons why is we have a potential spinning top candle after a parabolic move on gold. This is very, very, very significant, right? Spinning top over here, coming into this key zone. There it is. Have a look at that. We're not over yet. We need to wait for the week to close, right? This is massive, massive volume and liquidity that's happened within this gold market over here. And remember, we already met the target that we had outlined for a long period of time. And that target was based on this inverse, or not inverse, excuse me. It was based on the cup and handle formation, right? There's your cup, there's your handle. You broke out, you met the measured move. And what we said was anything that comes beyond that $2,900 level is truly just gravy, right? That's the gravy zone. So therefore, you wouldn't be looking to long gold over here. That's absolutely insane. You don't buy parabolas, right? But the reason that this is very, very interesting is because as soon as we started to see gold even pull back a smidge, that's where crypto started to put in that short squeeze. So what does that mean? Does that mean if gold actually starts to break down over here, that we are going to trade like the NASDAQ once again? We're going to start to put in big moves because a lot of people are talking about crypto correlating to gold and being gold 2.0. And I mean, this is what the crypto bros are like, right? Crypto bros want to trade like gold only when it goes parabolic. But if gold starts to come down here, you probably don't want to be gold 2.0. You want to trade like the NASDAQ, which is what we do trade like, right? That is what crypto trades like. So that's what we're looking at over there. We got the stock market, which also put in a bit of a move over here yesterday. Is this a sign of something bigger taking place? You know, possibly trade wars coming to a resolution. I don't know, right? Sometimes the charts tell you the truth before the news actually comes out. And could that be the case? It could be, right? I think we need a little bit more time for this to unfold over here. But if you do print the spinning top over here, you know, you might see price, you know, do something like that, come back, test that level over there. And that's going to be one of the generational short trade opportunities that you can put in, testing 50% of that candle. Too soon to tell. Do not timestamp or quote this. I'm not giving it yet. We need to wait a little bit longer, but that is super, super key. That could be a generational entry on a short trade over there, where gold will put in a massive, sizable pullback. So we'll keep an eye out on that. Remember, gold is also coming on a TD sequential. That's 𝗏𝗏, who created the 9 count using the TD sequential. We're coming on to a 9 top, right, which shows exhaustion on the gold chart on very, very high time frames like the quarterly and the yearly time frame. And that is very, very, very significant, right? Stock market over here, you still need to see price reclaim the breakdown level. 5,800 remains the level to reclaim. Otherwise, this is still lower lows and lower highs. But could Bitcoin have led the move? If Bitcoin has broken structure and created its first high on the daily time frame, well, that could be an indication of what comes next, right? We have the DXY as well consolidating underneath the bottom of the trading range. So this likely continues towards the downside. And if you feel like you've missed out, this is a great thing for you to read, right? A good thing for you to read from 𝗪𝗏𝗪𝗏𝗪, right? It takes one day of green in a bearish condition to feel like you've missed an entire bull market, right? It takes a day of green to have the whole feed chastising you for your stupidity of not buying the bottom, right? The charts being so obvious, the narrative being so clear. You've missed nothing. If we're changing the tides, then you have more than you'll ever need, right? Or more time than you'll ever need because you've created a high. You're therefore looking for the high-low, right? It's pretty easy. But again, of course, people on the show might get a little bit of a delayed indication as to what comes next. If you want the quick indications, you got to be in whale room, right? That's where things change fast. But this is your high time frame. This is your weekly chart. You're looking at the RSIs. Remember, the RSI has been one of the indicators that we used on Bitcoin on both the daily and the weekly to start to break structure. On the weekly RSI for the low time frames, for the altcoins, on the high time frames, is still in the oversold and the at least weak territory, right? Which means, again, resonate with that. It's still very, very, very early. If this is a proper reversal, you're only at the extremely, extremely beginning of a trend shift, right? Nothing has really happened yet. And if we are going to snap back in alignment with what the rest of the cycle would look like, remember, this has been a very, very massive deviation in compared to what we previously saw. Green is cycle 4, so that's your 2021 cycle. Orange is your 2017 cycle, and we started to deviate away from the norm, right? Which would mean that if you are going to snap back and continue, well, you're looking at about another 160 days left of the bull run, which means for you, it depends on what you want to do or how profitable you want to be. But what it means is that you're probably still better off taking a trader's approach. And that's at least been the messaging that I've given to the Whale Room Discord, right? Is that I've said to the members over there in the Zoom sessions that I'm very unlikely to take an investor's approach to this market whereby I'm going to build a massive portfolio, 10, 20 different coins, and I'm just going to sit on my hands and hold them and hope that it goes up. Instead, I think that this is definitely a trader's market where you want to be quick in, quick out. And if the trend starts to establish itself, you can start to jump in, right, into that trend. So what does it mean? Well, this has been one of the plans that we've looked at longer term, and this is one of the reasons why you probably want to take a trader's approach. And 3 weeks ago, many people were crying, wishing that they exited at that $92,000 to $94,000 region, which is where we originally exited before the breakdown happened, right? And then we said you're going to come and return back to the scene of the crime, right? Like a murderer, they often go back to the scene of the crime. They want to see exactly what happened at that point in time, and they go back there. And that's what the charts show as well. So you got your Elliott wave count over here, 5-wave count to perfection. Wave 1 comes down, wave 2, wave 3 puts in a high over there, comes down in for the correction, wave 4, and then wave 5. Now, we are not sure yet if this is the end of wave 5. This could continue, right? This could extend further. The only way that we'll know that the wave 5 count has come to an end is if we set in a lower high over here. If we take out that high, then wave 5 is still intact, and you can extend that further out. But if you do set in a lower high over here, and this is simply a relief rally, this is pretty much the exact zone where you'd expect that rejection to take place. So it's up to each and every single one of you. If I was sitting on 20, 30 different positions right now, I would count myself very, very lucky, and I would start to consolidate those positions. That was something that we already did previously, right? I see in the comments, right? We don't know, yes, left or right translated cycle. We aren't sure yet, right? If we reject over here, we could be in a left translated cycle, which means that the top is in and you're going lower. Now, this is where you have to weigh up the costs, right? You have to weigh up the costs. What happens if you exit over here? What do you stand to lose? That's called your opportunity cost. You, of course, don't stand to lose any money, but you stand to lose opportunity if prices go higher. Now, if this is the end of the Elliott wave 5 count, well, this could be the A-B correction. And then you go from B to C, which would probably drop prices down lower. It could be as low as $40,000, maybe $50,000, right? Don't focus on the price targets over here. It's more just about the structure. Now, what we've done is we've taken a fib level and we've gone from the high to the low, which is essentially the A, or at least the A part, right? So going from there, and then we got the A, B up here, and then down to the C, right? So if we measure out that fib level, this has always been the intended target, is to return back to the breakdown level. This is where you'd need to see bulls reclaim to truly show that they have strength, but on a closing basis. That's the important part. It needs to be on a closing basis. So right now, the most likely point, and it could come as high up as the yellow zone, right? The yellow zone is one of your higher up fib levels. That's like going up to the 0.88 fib level, right? But looking at the golden pocket, which is the 0.618 to 65, that is at $96,000 to $97,000, which means you could easily consider this a dead cat bounce. Now, is this a dead cat bounce? Is this a relief rally, a bear market relief rally, which is going to be found with resistance and then roll over? The short and honest take answer is that I truly don't know yet. If you asked me a couple of days ago, I would have said that it depends on how you approach this level. And if you grind it up into this level slowly, then I would have said yes. But given the haste and the sizable move that's come into this area with notable strength against the stock market and volume, I'm a bit 50-50 on whether this will be a lower high or whether we're just going to continue to smash through into new all-time highs. Remember, trading is about probability and understanding what you stand to lose. That's where you start. You start with, what do I stand to lose if I'm wrong on the trade idea? Well, what you would stand to lose, again, is going to be what we call the opportunity cost. And the opportunity cost right over here would be that you're missing out on a very, very small amount of the move. If you were to exit over here at that $96,000 level, you consider your idea wrong about 14% higher, which means that if price does break and create new all-time highs, the chances are you're going to buy 14 to 15% higher, but you're avoiding absolute catastrophe towards the downside. For those of you who are holding massive bags, ask yourself how you felt 3 weeks ago when you were coming down into this low, right? And you would expect it would be lower than that on the next run. Now, I don't necessarily think that's going to happen. In fact, I think that you'll probably find a bit of resistance over here. You'll come back down towards that $83,000 level. You're going to create a higher low, which is going to be an inverse head and shoulders. And then you're probably going to take a chance at the highs. And that's based on the seismic move that we've had in here with volume, showing that the bulls definitely have a bit of strength, right? And we need to take it as it comes. This will play out as we covered yesterday. Only into May is when you're probably going to get that high low. So that's something that we need to consider, right? We're looking at that over there. The other thing I just very quickly want to say is that 15% potential opportunity cost is really not even 15%, because the reality is you at first spike up beyond all-time highs, and then you're probably going to anyway throw back towards like 100K and put in another high low and continue, which means your true opportunity cost is literally next to nothing. Your true opportunity cost will actually only be about 5%. So that's basically what I'd be looking at if I was still stuck in a massive amount of positions, but I'm not. I've taken a more trader's approach. I'm in, I'm out. We took a big trade yesterday on ETH, massive just before the pump. I'll show you that as well in a second. Again, you would have only got that in whale room. So you're coming into key resistance over here. It depends on how this candle closes. If you close as a strong full-bodied candle above here, yes, you're probably going to continue higher. If you reject and you start to form a wick over here, well, then a lot of bulls are going to be trapped, right? That would have been the exact zone where you would expect a bull trap to occur if you were going to go lower, right? So one of the things that we use to gauge this trade is the USDT dominance, which we said was grinding into this upsloping trend line over here, which is also your parallel channel on the USDT dominance. And we said that based on the way that it's grinding into there, it looks like it's going to break down. We started to break through that level. We came back up. We formed an order block over here. And once we got that breakdown candle, we're looking to load up on longs on any of the little bounces into the zone. And we said your stop loss would be that, right? This is essentially the trade setup that we gave. And look at that. It played out to perfection. And that's why those long trades also played out and have hit the final TPs. So what do I have to say about this now? Well, if you see the USDT dominance continuing to grind into the pink box zone over here, well, then you could just cascade down one more time, which would create the next pump. Okay, this theoretically is the level where we're looking for the TP and a potential bounce on the USDT dominance. Now, even if you do get that bounce, by the way, I do believe that bounce will just simply set in yet another lower high, which would be another opportunity to load up on longs, which on the USD pairs of your favorite coins would probably look something like this. You've created that already. That's your left shoulder. You came down when Bitcoin went to 74K. That created your head. This bounce up into this region over here would probably come down and set in the right shoulder over there, which is your high low. And that's going to be the safest, most optimal point to get other long positions in, right? So that's what we're looking at over there. That's, but it depends. It depends on how price comes into a key level. Right now, you're grinding into that zone. So we do expect if you continue to grind in there, it's probably just going to break through. So a lot of liquidity now starting to form below. Of course, longs starting to chase price. They're only starting to chase price right now, by the way, because I believe yesterday most of the move towards the upside wasn't actually longs chasing. It was simply just shorts getting squeezed. But now you got those shorts who got squeezed repositioning on the long side, which means eventually you need to look for a trade in the opposite direction. So a big one, ETH BTC. We spoke about this. Similar to what I just told you, gold is on a TD sequential 9 top on the quarterly and the yearly time frame. While ETH BTC is on a TD sequential 9 buy on the monthly scale, whilst coming into very, very key support. And we started to see a little bit of a move from this key level. Now, will we sweep the yellow zone? I'm not entirely sure, right? We came very, very, very close. The zone that we had intended over here, we came within 6-7% of hitting the yellow line over there. That's the wick low on the ETH BTC chart. It's actually even closer. We came within 6.4%, right? Could that be the low and ETH BTC begins to get a bounce? It's absolutely 100% possible. When this does bounce out of here, this is an inverse parabola, which means a big move in the opposite direction. And yes, that took one of my biggest trades ever. It was on ETH, right? Right before the breakout over here, we covered this. I said if the market continues to squeeze, it's a very easy invalidation on the Ethereum trade, which will likely squeeze us to 1,800. If price can get above 1,800, it can easily go to 2,000. A very hated rally, and I took that trade, right? And look at that. Absolutely beautiful. Big gains over there. I mean, I went in with size, an 11% move on the portfolio. Very good trade over there, right? In whale room dropped over there for you guys. So what am I saying now, right? Well, if ETH can break above that key level, I think that the hated rally can continue to squeeze, because that would actually get ETH back above the key lows, or at least the range lows, which we would therefore consider that as a deviation, right? The other big trade that we have as well, which was dropped a couple of weeks ago on the 14th, was on 𝗠, right? And we're looking at 𝗠 at $2.20, and that was based on the 2-week scale coming into key support, holding that upsloping trend line, MACD starting to cross back towards the upside with the Ichimoku cloud, which would then turn green, which it is now green. We also had the same thing showing on the 3-day time frame, and we had bullish divergence over there, and that's also been a massive trade, right? Look at that. If you took that trade with us from the same levels, you know, you're up 35%, which is absolutely amazing. So what do you do with all this, right? Well, this is literally the first high. And again, I want to go back to this over here, right? It takes a day of green in a bearish condition to feel like you've missed a bull market. I mean, come on, guys. Have you missed the bull market? Absolutely not, right? This is just the first move. If this is going to be continuation of the bull market and you're going to continue this trajectory, well, ultimately, you'd be looking to buy the next high low, which therefore would look for a pullback down into the zone. There's going to be a lot of inefficiency candles, a lot of what we call fair value gaps, right? Big, large, abnormal green candles come back to get filled. So at some point in the next 3 weeks, you're probably going to come back in there. That's where you're going to form the high low, and then you can reposition that trade. So what should you do with the 𝗠 trade? I told the whale room members I'll let them know, but I'll give you guys a little bit of a clue. One of the things that I'm looking at, I'll just highlight this and make it a bit bigger, is this over here. Marking those highs, I think that you'll find a little bit of resistance if you do even make it as high as this. That would retrace the full Trump pump and dump, which occurred at these 2 candles over here. You can see over there, if you do meet up into that zone over there, you're looking at about, let's just line it up. It depends when it happens, if it's today or tomorrow, but about $3.28, I'll be TPing that position. As it stands right now, I'm still in this position. So some massive gains, the Bitcoin trade, we got the ETH trade, we got the 𝗠 trade, and I think we've even spoken about Solana early on in the week, and the game plan has all been the same, targeting the yearly open. So we can have a look at some of those. What I also find interesting is with gold putting in that spinning top, you do actually have Bitcoin dominance finding a bit of resistance over here at that key pivot level. Now, I don't call this weakness by any means. We still need a lot more information to determine whether there's going to be any sort of rejection from here. But also looking at the MACDs, you know, still continuing towards the upside. I think the next level to watch for is going to be the 66.27% level on the Bitcoin dominance chart, right? So we can look at a bunch of the coins over here. You know, a lot of people aping into positions. But again, I want to remind you, there's unfilled fair value gaps over here, which is when you get a pullback, you're probably coming down into these zones. For example, on 𝗠, you can expect a sharp pullback into this 250, right? If you look at Solana, we can have a look at Solana quickly. Solana hasn't moved as much, right? Solana is still, you know, kind of trying to find its feet over here. But Solana, you'd be looking at a pullback into this zone. That's right into the previous month's mid-range, about $145. I think people are going to be loading up on longs over there. Let's look at ETH quickly. ETH is also going to have a bit of inefficiency candle. So we've taken that trade. We've taken profits on this trade as well. You know, you're looking at this zone over here. That's your first area of interest. Midline is coming in at about 1721. You know, if you do lose that level and you come a little bit deeper, you could come all the way back down towards the Monday high at about 16 57. So all of our trades are looking good. We took these on Pinex as well. You can see over there, we're up on the positions on 𝗬𝗎, Solana, ETH still a little bit down, believe it or not. But there you go. 𝗬𝗎, trading bots up a lot. That is on Pinex. Solana also up a lot. And then we even have the cross margin trade, which is both a hedge position, long and short, 32% over there. If you do want to follow these, by the way, you can just copy them. They're below. You can copy those bots. You get $1,000 if you sign up over there. Use the link below and then click those if you want to copy them. Remember, I said I'm going to open up a couple more of these positions. That's going to happen now soon. Some of you message me saying, should you be taking profits on those? Remember, the bot does that automatically. You don't need to do that. That's how the bot's program. The bot is going to be taking profits on the way up, and it's going to be buying on the way down, playing out those trading ranges. So we're going to open 2 more of these trades. Get your accounts ready. So as soon as we open them up, you can join in immediately. All right, let me know in the comments if there is anything else, right? Let me know if there's anything else that you guys want to have a look at. We can have a look at a couple of the other coins over here. Very interesting, especially with gold, right? Very, very interesting market at the moment. We'll see how things play out. It's super, super key. I think a lot of people are going to be taking profits as well, by the way, guys. So be very, very, very careful with leverage, especially. I think spot is okay, but be very, very careful with leverage. Hype is coming straight into that resistance level, right? This is the key level on hype. We'll just go into the daily time frame to show you a bit better. There it is, right? You got the parallel channel governing price towards the downside. Be careful of a rejection over here on hype from this key level. So I know what the FOMO feels like. I know some of you may be stressing. Just go back and keep reading this tweet, right? You can read the full tweet over here. Like, you just need to catch the main trending moves. That's all that you need to do. You don't need to buy the bottom or the top. In fact, you'll get absolutely rinsed if you keep trying to do that. Okay. Render. Let's have a look at render. Let's go onto this chart though. Let's move these up next to each other. We'll have a look at render. Okay, render. We'll go to this one over here. Okay, so render coming into the key high over here. If you can consolidate and hold above this level, I'd really say if you can maintain above Monday low, which is about $4.20. The targets remain the same. Guys, nothing has changed. We've been giving the same message for weeks now. The message has been clear. The message is that the target is the yearly open, right? For a lot of the coins. The real question is, do you first put in a big pullback to create a higher low and also confirm those inverse head and shoulder formations, right? Or do you just grind straight through to the yearly open? I don't know. We don't know yet, right? We don't know yet. I would imagine that given a move like this, there will be some sort of profit taking. So that's ultimately the yearly open is the target, $7. Okay, let's quickly go back to ETH over here. So ETH still hasn't broken this trend line, which is pretty unbelievable, right? So if you look at that, that's the main trend line. It's still not even close to breaking that trend line. That's what I was talking about. This yellow zone over here for ETH would be the equivalent of deviating, reclaiming that key level. So if we just use the highlighter, you're deviating, getting back above, which means if ETH can start to reclaim, back above this $1,800, $1,900 level, this can potentially start to squeeze to the previous month's high. When you look at a lot of the coins, like we've just covered, a lot of them have already recovered close to this Trump pump, right? You can see ETH is still lagging significantly over there. All right, what else, guys? Okay, Fartcoin. Let's see how Fartcoin did. Did Fartcoin continue to squeeze with the rest of the short squeeze in the market? How's it doing? Let's click over there. It has, right? Remember, the target is still the same. Every day I've been telling you guys, nothing changes over here. You're looking at the 50% level, which is going to be $1.48, right? $1.48. Also, that's another key point that I wanted to outline is when looking at, any of the coins, when you are looking for the next pullback, one of the key ways to find that pullback once you set in the high, right? You have to have a confirmed top, but a good way to find that high is going to be to use the fib level from the low to the high over there, and then watch that 50% level. I know it's a little bit messy on this chart over here. Maybe I can turn off. Yeah, let's turn off this over here to clean it up a bit. There we go. So the pullback, when it comes, and it depends what level it comes from, right? You have to have a confirmed top. Like let's say Bitcoin goes to 95K, then that's where your fib level is going to be. Then you're looking at a pullback towards 84,000. You'd be targeting the 50% level for the majority of those coins. All right, cool. So I think, again, use Bitcoin as the guide. Watch Bitcoin, watch Ethereum, watch some of the majors like 𝗬𝗎, Solana. I think those will give you good indications as to what comes next. I don't think that there's any need to rush yourself into positions. Could you have one more day of a continued squeeze towards the upside? I think it's very possible. That would put Bitcoin around 95, 96. These squeezes can be violent. And then I think that towards the end of the month, you're going to get smacked back down again, right? So everything is here for you guys below. Remember, if you do want to join, take advantage. I did organize these. I can see already on my emails on my watch that you guys are busy aping into these. That is it from me, guys. I'll see you all on the next one. I do hope that you have an absolutely wonderful day, and I'll catch all of you later. Cheers for now.